Well, uranium, nuclear is pretty powerful, and 20% of the power in the United States is generated by nuclear. What's important to know, Andy, and the point I really wanted to make, we talked about not this, but I wanted to say it on your program, is most of that 20% is 50-year-old nuclear plants are old. So the vast lion's share of them have to be decommissioned. So think about 20% of the United States energy being turned off overnight, just as a thought experiment. How do you replace that overnight? Well, you're not going to do it with solar and wind, as I just said.
David Morgan of the Morgan Report. How are you?
I'm doing well. Thank you, Andy.
Thanks for coming up on board. You have some very interesting takes on the economy, and I'd like to start. Let's start there, working our way through that. And the reason I say that is that the stock market's at or close to an all-time high, but yet the economy doesn't seem to be doing very well. I say that just anecdotally from my own family's pocketbook, if you would, just in the sense of inflation, feeling inflation. We're doing fine, but feeling inflation, but then also just local businesses from where I'm calling you from Atlanta. A lot of retail shops are closing up and that sort of thing. So wanted to get your take on the economy and where we're at moving into 2024.
Well, the economy is in a new trend, and the new trend is contraction, not expansion. And the physical economy and the stock market are no longer correlated hardly at all. So people get kind of brainwashed that, if the Dow's good, the S&P's making a new high, technologies are doing well, then the economy's doing well. And what it really means is the stock prices are being manipulated higher. And it's not hard to do when you have an input of excess, let's say what I call funny money going into the system, and there's really no place else to go other than the asset class. Stock market's one of the easiest places to put money into, of course, the bond market as well. So we have two things happening. We have a contraction in the global economy, and that makes it where people and nation states want to be more protective of their own selves. In other words, when your household economy contracts, you're making the same amount of money, but it's buying less. You start to be more mindful of what you purchase, what the discretionary income could go for. You have less of it. So maybe you don't go to the movies twice a month, maybe once, that type of thing. You look at that on a macro scale and you say, well, wait a minute, do I really want to sell this excess food reserve, or do I really want to sell this whatever for something I might need for my own nation state? So become more protective. And then on top of that, the game of we'll give you a piece of paper and we'll take real stuff is ending. And that is because of too many people for too long have really been hoodwinked by the U.S. Treasury market, saying it's the safest investment in the world when it really isn't. Anyone that can do fourth grade arithmetic knows that this not only won't end well, but it's mathematically impossible to pay it off. And the most likely scenario is to quote unquote pay it off by printing the currency until people won't even accept it anymore. Now, I don't think that will actually take place with the US dollar, but we'll continue on that trend. And of course, the powers that be have a backup plan A, which is basically a central bank digital currency, which we could talk about later. So the last point is that while we're contracting and nation states are becoming more protective, we still see the other side of the coin with the WEF Davos group looking to continue to make globalization their goal, where the WHO, for example, could come out and mandate the entire world and supersede any treaty between nation states and edict that you have to adhere to such and such, because one, we say so, and two, because we have the legal authority to do so. So it's a very convoluted, very interesting, and very cautious place to be. But we have to be mindful, and we have to be able to realize that we actually have the power of choice, even if the choice may, quote unquote, appear wrong or quote unquote, appear unlawful. Remember, I forget who said it. I love to give quotes that I can back up, but the one that comes to mind is a just man disobeys unjust laws. I mean, obviously we have sovereignty over our own bodies. And of course, with the last situation, we found in many cases you didn't. I mean, in the ultimate case, you did, but you did end up losing your job and not be able to support your family. So, how much of a choice were you given? And the answer is not much.
Well, let's work all of that out. It's interesting that you said that we have sovereignty over our own bodies. And I was about to say, well, not really. And then, as you alluded to, and it's interesting to me is like, okay, we did, but you were ashamed at the best. At the best, you're ashamed. At the worst, you lose your employment, if you would. Um, so it just seems like sovereignty at every level is under attack. Um, if you would, not only under attack, it's being greatly infringed upon, as we know it. But again, let's go back to the economy. I was very surprised that the Fed was as aggressive as they were in raising interest rates, because you raise interest rates that fast and things break. I was equally surprised that some things broke, but not on the scale that I thought they would. And I'm assuming that though that is not done, that collateral damage hasn't been done. And when I say damage, the Fed certainly should have, in my view. The prudent thing would have been to raise rates, but banks started failing. And where are we at in that cycle is, I guess, is my question. And then it was also very surprisingly how dovish they were coming out in December. So where, in your view, yeah, comment about all that and answer
Sure.
that. Where are things broken, or if they're going to continue to break?
Well, we don't know where we are in the interest rate cycle. I mean, you can make the argument that we've already peaked and we're going to pause for a while and then start tapering off. And that's not a good bet about 80%. There's still the possibility that they'll pause and actually go higher because the market forces it higher. I'll get to that in a minute. And then it's really a psychological operation. I mean, having my age, I'm going through pretty big inflation in the United States. They did such ridiculous things. I mean, you think adult people would put a badge that says win on it. And these win badges were during the Ford administration, and they stood for whip inflation now. But this is the idea that, if you think you're in a good economy, you are. If you think things are good, they are, so power positive thinking, which I'm not against the power positive thinking, but we also have to think in terms of reality. And the reality is that the economy is contracting, things cost more, and the psychology of inflation has not been deterred yet. So even though the numbers look better from the government's perspective, is it really? And those are the questions that your average American goes out, average world citizen goes out and looks at. They don't look at the economic data. They don't read the Wall Street Journal. They don't listen to financial channels. They buy gasoline and food, pay rent and their heating bill. And if that continues to go up, the psychology of inflation hasn't left. In fact, it's really instilled further, which means that you could do whatever you want with interest rates. But if the vast population believes that something's going to cost more tomorrow than it does today, you have not beat the psychological aspect of inflation. And that's something that very few people talk about. And that's well and good, meaning good, not it's a good thing, but good meaning it's a powerful thing that has not been quelled yet. And I don't think it will be with a couple of interest rates moves. It may with the people that are making enough money where it affects them, but not in a drastic way. They still have all the discretionary income they want, for example. Those people, yeah, inflation's down, stocks are up, everything's wonderful. But for the average person that's just making a living, they won't see it that well. They'll see it entirely differently. Coming back to interest rates being forced higher, and when you go to the bond auction and you put out an offer for so many bonds at such and such a rate, and there's no one actually bidding at that level, then the offer goes up. You bid up higher, and that means interest rates go up. So Powell actually said it about 6 months ago. We don't have to raise interest rates. The market's doing it for us. And I don't know if he knew what he was saying. I presume he does, but I don't know if the general public understood what he was saying. Because if you've got to stay in the dollar bill, I call the old maid, but the old maid is the best hand that you can have until it fails. So in other words, why is the dollar stronger than the yen? Why is it stronger than the Canadian dollar? Why is it stronger than, you know, whatever other currency you want to compare it to? And the answer is because we're not printing as fast as everybody else. That's generally the truth, not always, but generally. So Zimbabwe outprinted us, so therefore, their currency went in the toilet. Plus, they don't have an advanced bond market. There's other reasons. So we are in that trend. It hasn't ended yet, and the psychology hasn't been broken. So I could see where we have a 20% chance where we may pause and actually have to go higher, not because the Fed wants to raise it, because the discount window got raised, but because the market itself said, I don't trust your dollar very much longer, because I don't trust it very much longer. By the 6-month T-bill, I want to get this kind of a yield, and interest rates go up. So don't rule that out. I'm not saying I'm right. Remember what I just said, I'm giving that a 20% chance, but I certainly can't rule it out because, in this market, thinking is very important, and you got to think about, both sides of the equation. So.
That's a good point because I remember when I was starting my career, you have to think of everything on the spectrum, if you would, and then just do really the best that you can. But talk about okay, so where are we at with the banking sector? It seemed like they're failing right and left. We had some big failures in the spring and the summer of 23. Do you expect that to continue to happen in 24? And again, it's like, if I don't see people out rushing to buy cars with interest rates the way they are, nor real estate. So where are banks making money?
They're
And if they're
not.
not making it,
Yeah. I mean, they're up there. Yeah, the banking crisis is far from over. In fact, it really just began, a year ago or whatever. And we haven't heard of many bank failures of late, but most are insolvent. If they had to take their long bond portfolio and market to market and take a 30% hit, 40%, whatever it may be, they're basically insolvent. All banks are really insolvent from the aspect of the fractional reserve banking system. I mean, and that's illegal and lawful, and that's the way it's been for a long, long time. But, if you only have to have a 10% reserve, which really it's not that high, but let's say, for every $100, there's only 10 on reserves, but the depositors have 100 at the bank. So if all depositors come back and say, hey, I want my $100, and the bank says, well, wait a minute, we only have 10. I mean, they all got out of business overnight. So there's that aspect of it. I'm not forecasting it. I'm just reiterating how the fractional reserve system works and why it's so unstable at times. But the problem now is that banks need the deposits to function. They need liquidity. What's liquidity? That's cash here and now. It's cash on the table. And it's been contracted in two ways: the increase in interest rates we just discussed, and because of the increase in interest rates, money that was sitting in the bank earning next to nothing has now gone into the money markets. And the money markets are composed of paper, corporate paper, corporate bonds, and loans, bankers' acceptances, treasury bills, bonds, whatever. So it's basically a bunch of assets, securities that are trusted to be very liquid, that will provide a yield of, 4 something percent. And so people are moving their money out of banks. So now the banks are becoming less liquid with a balance sheet that's really bad. And it's pretty easy to conclude that the banking crisis isn't over. The problem with the banking system at large, and it's true globally, is they're all interconnected. And that's what happened in 2008, when they let Lehman and Bear go. They kind of had to put a halt to it because those dominoes, two had hit. If they didn't stop it, then it would have gone to 4, 8, 16, 32, because it is an exponential function. And they stopped it in time. Will they do it this next time? I don't know. They've already reneged on their promise. The promise was that it's illegal to do a bailout. You can only do a bail-in. But when Silicon Valley Bank failed and all the billionaire class had moved their money out of there, a great many of them, the people that were left were bailed out by the banking system. So you can't even trust them at their word, which I seldom do, if ever. But So it's a convoluted mess. It's not over. The best thing you can do is keep your balance under 250,000. Even at that, you're not assured that the FDIC will have the capital to bail, to make your account whole. You are an unsecured creditor at the bank. The deposit that you put your money into becomes their money, and you're just a creditor to the bank. You've actually made a loan to them. So, not trying to scare anybody. I've said this many, many times.
Sure. Well, let me ask you then, what do you see? What are some of the potential next shoes to drop then in the banking sector if it's, as for all means, by all means, it looks to be insolvent currently?
Well, you'll see the bigger banks gobble up the smaller banks. You'll see, well, we've already witnessed the trend will continue. How many regional banks have closed? I mean, I put a video out on my Twitter. I think it was in New York or New Jersey, and all these banks that are gone, they just basically closed the doors and locked them. And that's happening all over. ATM machines are being shut down or taken out. So there's a huge contraction in the banking system, just like this matching the contraction in the physical economy. So you're having less access to cash and less access to banks, and that will continue. What the grand scheme is to consolidate the banks to a very few, and then to put the central bank digital currency into the hands of the Wall Street banks, not necessarily in the hands of the Treasury, so that the Federal Reserve can remain independent and say, well, we're just an independent agency. It's really not our job to issue the money. That's the Treasury's job. We just print it and loan it, or the Treasury prints it, but it's owned by the Federal Reserve. It's a Federal Reserve note, and that gets put into circulation. So we'll provide that service, but the digital banking sector will be run by JP Morgan, Wells Fargo, Bank of America, and XYZ. All their banks are now null and void at the end of October 1st, 2025. That's just a scenario. I'm not predicting that, but I'll give you a yes what the trend is. That's
Yeah, no, I totally get it. I guess my next question really would be, or just the point is, it seems like a lot of the world already has this. I mean, if you look at Canada or most of Europe, I mean, they have one or two banks per country, or maybe a little bit more, but it's not more than a handful, if you would. My next question is, and I'm already seeing it when I just go to the grocery store. It's like I can't pay with cash. Um, I- Talk about that. Work that out. Is that part of the whole going into digital currency, a government and new currency, a digital currency?
yeah, it is. There's a direct correlation, at least from my studies, that having anonymity with your finance is paramount to freedom. It's nobody's business if I go to a garage sale and buy a used cowboy hat or whatever. Why should it be? And if I want to pay with it for cash and the other party accepts it, well, why not? But the bankers hate that, and so they are moving toward a cashless system. That's been in the plans. Of course, you will hear them deny it. And I have a rule that I forget I picked up from one of the newsletter writers I used to read, and he stated that once the government denies something three times, it's a certainty it will happen. So Christine Lagarde said that, don't worry about the digital euro. We'll still have cash. So that's number one that I'm aware of. It may be number two, maybe number three. I've heard her say it once, and they won't do it overnight. It won't be, it could have the digital euro and cash, but then they'll slowly phase it out. And then you could have cash, but if you can't use it, what good is this? As if it doesn't exist anyway. So you've got, your 100 euro notes, your 500 euro notes, and you're walking down the street. Now, a private party might take them. But as far as, let's say, any merchant on the street, no, we don't take cash. You got to use your digital currency. So there's several ways to block it out. And as I said, maybe a small thing, but part of the equation, and that is, ATM machines being taken out. So it's a control. It's to be able to track, trace, and tax every transaction you do, even the ones at a garage sale or a flea market, that you have no way out. And of course, there's always a way out. There's always a free market, often called by authorities a black market, but it would be bartering for silver, bartering for something that you want to exchange it. I don't know what, some piece of junk jewelry for the cowboy hat, whatever, I mean, those exchanges are always going to be made, but not on the aggregate, not in the whole. It can't be implemented. That's why money becomes such a valuable idea, because it's stored labor, and everybody purportedly would have an equal chance to store their labor. Of course, that's not true under the system we have, but nonetheless, the idea is that you can save for the future and have a pretty good idea of what that's going to purchase in the future. And of course, that starts to go away, as we've discussed, once inflation really takes off.
Let's talk about energy here. You mentioned offline that you had some thoughts on energy. Uh, Give me those. And I'm very keen, or I should say, I'm very aware, keen on the energy markets, just because that's really what fuels everything, literally as well as figuratively. Uh, and I'm also quite surprised about where the oil markets are at, and then just with everything going on in the world. And I'm also we had some big moves in nuclear energy. But yeah, what are your thoughts on all of that?
Yeah, well, you said it well, Andy. First of all, the world runs on energy, not on money. Money's a representation of stored labor, but without energy, physical energy, mental energy, intellectual energy, all of that plays into the fact that without the oil boom we've had since roughly 1900 to present day 2023, we wouldn't have the population growth. We wouldn't have all the infrastructure. All these things that we have is because energy has been so cheap and so abundant. Uh, Doomberg wrote a paper. I'm not on his paid account, but on their free one, which I usually read almost all of it because it's a pretty quick read. And Chris Martinson, friend, who did the crash course, rebutted a lot of Doomberg's arguments on the peak oil situation. I lean that way quite a bit. I am not a big believer that we have infinite oil, or we have so much we don't have to worry about it. Certainly the market's controlled. In fact, for all my metals heads friends out there, the oil market's probably more manipulated than the gold market, believe it or not. But the idea is that without this cheap energy going forward, all things are going to cost more, because if you're running out of energy, whether it's real or not, it certainly appears real to me. I mean, you wouldn't be fracking if all these wells that have been depleted had adiabatic oil and they refilled themselves. I mean, all those pumps that you go through in Fresno, California, when you're driving on the highway and they're sitting there not moving, it's because they're out, can't pump anything. Regardless, so what I wanted to say, it's kind of important, is one, that peak energy is probably already taken place. Fracking will keep it going for a while longer, but conventional means cannot be substituted by solar or wind. Can't be done. I did a study on solar, and the amount of silver required for solar only United States. It's impossible. We don't have enough silver under present technology. Could the technology double, meaning where you use half as much silver for the same amount of kilowatt hour? Yeah, it's already gone up 400% over the last 20 years. Is there room to improve? Maybe. But regardless, even with that, all you would do is power 4% of the world's population. So solar won't fix it, not on aggregate, not in the whole, not for the world. So we got to come back to, what can we substitute? Well, uranium, nuclear is pretty powerful, and 20% of the power in the United States is generated by nuclear. What's important to know, Andy, and the point I really wanted to make, we talked about not this, but I wanted to say it on your program, is most of that 20% is 50-year-old nuclear plants or older. So the vast lion's share of them have to be decommissioned. So think about 20% of the United States energy being turned off overnight, just as a thought experiment. How do you replace that overnight? Well, you're not going to do it solar and wind, as I just said. And so we really are not thinking ahead, in my view. Now, the one thing, and I'm not really eloquent at this, so ask me, I'll probably have to say I don't know, but I'm a real fan of the SMR, the small modular reactors. I mean, these small cookie cutter things you punch out, they're all uniform. You punch them out, and one unit is good for 100,000 houses or whatever. However, the companies that were investing in that thought basically back down. And I would suppose economically speaking. So if you're going to go to conventional nukes, I mean, these things are billions of dollars, are always behind, but over budget, behind in time. I mean, it's a mess. So this is something that I have not heard very many, and I'm not a big nuclear expert, believe me, but I do read and I do study and I do learn and I know how important energy is. And if we're facing that over the next, say, decade, and you can't really build a bunch of nukes in uh, that fast. Maybe if we hire the Chinese, we'll have them come in and build it for us. But it's kind of a mess.
Yeah.
And so the contraction economy will continue, um, as I said earlier.
Yeah. A lot of going on there. I would like to comment. Yeah, I share your concern. It's like, okay, uranium strong, very powerful, but you can't build one of those overnight. I mean, those take years and years to build, whether that's whether that's mining it to the infrastructure to the reactor, whatever. I mean, that's a long process. I was talking to an analyst earlier. It's been about a week, and he mentioned coal, and he was very bullish on coal, which I have to agree with him. But I have a thought on that. But it's because it's still so cheap, and most of the world still runs on coal. But think about it, David. Here we are in 2024, and we're talking about running the world. That's how messed up it all is. Um, I had somebody talked about, he just asked me point blank, you know him. He asked me offline, Andy, why is oil down to where it's down? And I gave him three hypotheses, and you kind of hit it on it. It's number one, severe deflation, possibly in China. I can see that. Number two, it's really there's an election year coming up in 2024, and I don't know how they do it, whoever they are, but they gotta keep oil down or they're gonna get hammered. And so my point is really it's very political. They have to keep oil prices down. And I don't know how they do that. Again, we had the releasing of the strategic petroleum reserve last year. But again, the only way I can see it just selling a bunch of future prices. That's the only way. But I just look at
Yeah.
you
So
know, I just look at the inventory reports, and we're still the cupboards are bare. So that's the only thing I can really think of. And then computerized trading. That's the only thing I can think of. And what it really reminds me of, and the last topic I want to get to is really the silver market. I mean, I've heard you saying for years, if you line up what people buy or want silver in in silver contracts and the paper contracts, and if they actually take delivery of that, and I'm just not saying this as you would, I mean, but there's just not enough silver to meet the contractual demand, if you would.
I'm going to go back in time a bit to make a point. So when the US dollar was really tied to gold under Bretton Woods, when the gold market was under Nixon, we had the London Gold Pool, and they were very, very powerful. And their basic edict was to keep the gold price managed, and they did for quite some time, and then it failed. And that's sort of an analogy for, I think, where we are now. The the COMEX and the LME or LBMA have been able to basically manage the price for a very, very long time. And the contractual obligations that are met are ones that they want to meet. A lot of this stuff is just paper gold and paper silver. However, the problem with silver more than gold is that you can't put a paper contract in a solar panel. So the above ground stocks have been depleted quite a bit on the silver side. And that continues. And the other thing that's unusual to me is that the ETFs have been drained of silver as well. You would think these algorithms are good. And so there are times when you really would expect input or inflow into the silver ETFs. Outside of the PSLV, you're really not. So right now, We're sitting at 42 million ounces in the registered category, 237 million ounces in the eligible, which is basically long-term investors that really aren't apt to sell their silver, or at least not very easily. And the combined total is like 280 million ounces. I forget the number exactly. I know it was like about 350. So the stockpile is being depleted. And COMEX is the last place that you actually take silver off the exchange. I used to think everything had to go through the COMEX and then went out of the industry. It's very wrong. I lost that thought after learning more years and years and years and years ago. But most of the stuff is direct ship from the refiner to the user. And many times the refiner puts it in a form that the user needs it, in pellet form or wire form or mesh form or certain plate thicknesses or what have you. So regardless, when you see a lot coming off either exchange or both exchanges, that's a clear indication that you're not able to get it anywhere else. And with so little going into institutional investment, that's another clue that something's going on in the silver market. So I think this is the year where we start to see more and more pressure on prices in both metals. Gold will have to lead, silver will follow, but I think it will catch up as far as the gold silver ratio. Or once we get below 70, that's my number. I think we'll have confirmation, just like the transports has to confirm the industrials. Silver really has to confirm gold's move. Gold's moving into an all-time record high in nominal terms. Silver really should be able to say that that's true, confirm it. So not a great answer. I mean, people want to know to the day and price what's it going to do. And the answer to that is I don't know. What I do know what the trends are. And it's rather disturbing when you look at, for example, let's say JP Morgan, all right, they've got 132 million ounces. So, they're at almost half of the total silver supply. And yet 116 million of that's in their vaults for people that want to hold on to it. They only have 15 million in the registered category. So, if we use up 500 million ounces in a year, just in the industrial side of the silver market, that's what 50 divided by 12. So that's, 45 million ounces a month. I mean, you're looking at, 1/3 of 1 month's supply in the registered category of JP Morgan. I mean, that's the reality of this. Now, of course, it's being mined and it's being direct shipped, as I just said. So don't think that it's going to all come off the COMEX. It's surprising so much has, is really my point. So maybe I belabored that too much, but I am still a believer that from a monetary, industrial, legacy perspective, that silver is probably the best place you can be on a safety basis over the next decade. I would bet my farm more on the 10 years going out in silver than I would on the 30-year treasury bond.
Yeah, no, absolutely. Well, let's end on that. David, how can people find you? I'm sure you're already a name, so I'm sure they can't find you. But go ahead and go ahead and give us that.
Sure. Just go to themorganreport.com. Best thing to do is go to the blog tab, sign up for our free newsletter. And on the blog tab, almost everything I do like this is posted for free. And off on the right-hand side of the blog page, there's the direct link to Twitter, LinkedIn, Facebook, YouTube. All those things are direct link there. So if you like them, you can bookmark them. Not, pass them by.
Got it. Well, I will put all of this in the show notes below. David, you're very kind. Thank you for coming on. Again, I've been a huge fan for many years now, and I just want to thank you and thank you for all you've done for me.
Thank you, and it's a pleasure to be with you.